Thank you for watching NTD Business. Top stories tonight. Elon Musk selling even more of his Tesla stock for the second time since he bought Twitter. But some Tesla investors not happy about it. Retail sales see their biggest month-over-month drop in a year. What's behind it? Former President Trump now selling digital trading cards of himself, including one displaying him as a superhero. That and much more coming up on NTD Business. Great to have you with us, Don Ma here. Tesla's CEO Elon Musk has sold another $3.6 billion in Tesla shares. It's according to a securities filing Wednesday, which showed he sold over 22 million Tesla shares earlier this week. It's the second large chunk of Tesla stock he's cashed out since he bought Twitter in October. Though it's not clear if the sales are related to the Twitter purchase, but some investors are not happy, according to analysts. There's a perception Musk is focusing more on Twitter than Tesla. His stake in Tesla is now down to 13.4% compared to 17% a year ago. Tesla stock has fallen by half this year, but the firm is still more profitable than rivals who are struggling to make money from selling electric cars. Former President Donald Trump is entering the NFT business. Today, Trump announced on his social media platform Truth Social the debut of his official digital trading card collection. The ex-president says the cards showcase his life and career, but the featured artwork also includes him as a superhero, astronaut, a cowboy, and others. Each card is $99 and is an NFT, or non-fungible token, which is a digital collectible. The cards can be purchased at collecttrumpcards.com. The website notes the cards are not political, and it says the money will not go to Trump's presidential campaign of 2024. And consumers are feeling the strain from inflation. Retail sales in November saw their biggest drop this year, according to the latest Commerce Department data. Retail sales dropped 0.6% last month, much lower than expectations. Retail sales are mostly goods and are not adjusted for inflation. They increased 6.5% year-on-year in November. People are spending less on some big-ticket items. Auto sales, for example, fell 2.3%. Furniture store sales dropped 2.6%, and electronics appliance store sales fell 1.5%. Consumers were buying less online as well, but it seems like people still enjoyed going out last month. Sales at food services and drinking places went up. And now joining me is Ted Rossman. He's the senior industry analyst at Bankrate.com to talk about retail sales. Now, Ted, we had the biggest drop in nearly a year in retail sales. Tell me what's happening here.
I think this is evidence that the Fed's rate hikes are having their desired effect of slowing the economy, but that's bitter medicine because it just doesn't feel good for consumers right now. Interest rates are up, inflation is still high, people are feeling squeezed, and I think that's a big reason why people are pulling back here. And they're really being very thoughtful about how they spend. Because this is normally when they make a lot of their profits. And this year, consumers are being a lot stingier, I would say, with how they spend. We see the personal saving rate now is down to just 2.3%. And you just have to wonder what happens moving forward. Credit card rates are at record highs. Credit card debt is almost all the way back to its record high from late 2019. I just think something has to give. And spending has been remarkably resilient this year. I just don't know how much longer that can continue to this extent. And even in this report, we're starting to see evidence that even the gains we're seeing are getting eaten up by inflation. So I think this is the start of a broader consumer pullback.
So we know the Fed raised interest rates by another 50 basis points yesterday. Do you feel like this sentiment among consumers, do you feel this is a temporary thing, or do you feel like this is just the beginning of something else?
I do think that the recession worries will grow as we get into the new year, once the holiday enthusiasm fades, some of the pent-up demand for travel and other out-of-home activities that stacked up during the pandemic, that could fade. Bars and restaurants, by the way, were a real bright spot in this report. So that kind of cuts against the grain a little bit. We're saying people are being especially thoughtful about how they spend. they're spending like crazy at bars and restaurants. But I think that's really a pent-up demand effect that accumulated during the pandemic. As we head into next year, though, I think people are going to be more worried about a possible recession, job losses. The first quarter is often a time when spending slows, debt payoff increases. I think, unfortunately, a lot of people are going to have some sticker shock and some holiday debt hangovers when the bills arrive.
All right, just one last thing, Ted. You mentioned earlier savings are down. Do you have any potential tips for consumers?
It's so important, and especially now we talk about New Year's resolutions, boost your savings, pay down debt. I mean, I know it's easier said than done, but when it comes to saving more, I especially like two tips. One would be make it automatic. So have money transferred from every paycheck into a dedicated savings account. The top yielding savings accounts are at 4% now. That's a positive of higher interest rates. The other thing is accumulate savings accounts are up.
All right, thank you very much, Ted Rossman, bankrate.com. Pleasure speaking to you today.
Thank you. Profits and this people back here.
TikTok user are the Dow fell 764 points, or 2 3/10%. S&P dropped 100 points, or 2.5%. Nasdaq lost 360 points, or 3 2/10%. For the first time ever, U.S. regulators today said they've gained full access to audits of Chinese companies. It's good news, of course, for around 200 Chinese firms listed in the U.S. It means they probably won't be getting kicked off of U.S. stock exchanges. The U.S. has battled for years to gain access to Chinese audits because of accusations of accounting fraud at Chinese companies. The U.S. even threatened to kick Chinese firms off the U.S. stock market. Then finally, in August, China agreed to give access. The U.S. accounting watchdog chose two firms for audit in Hong Kong and China. It says it got complete access. The SEC says while it's a move in the right direction, routine compliance shouldn't be newsworthy, and it's concerning that it took more than 15 years and an act of Congress for Beijing to comply. The accounting watchdog warns if Beijing stops cooperating, the threat of delisting will be back on the table. Former U.S. Senate Chief of Staff Chuck Flint says TikTok will be able to access government employee data if employees had it on their phones. This includes sensitive personal information like browsing history and location data. He says it's not impossible that the federal government may very well ban TikTok nationwide.
TikTok's American user data is shared or accessed, over in China. It's routinely accessed. There were employees that were quoted as saying that everything is seen in China. Once the dangers of this become more known, I do believe that there will be a ban. But right now, corporate America could do more to help educate people about the dangers, and they're just not doing it because it's all about money.
Seems like officials have been raising concerns about TikTok more and more recently. Over the past 2 weeks, 7 states have banned government employees from using TikTok on government devices. Last week, the state of Indiana sued TikTok twice for data security and inappropriate content. On Tuesday this week, 15 attorneys general told Apple and Google to stop labeling TikTok as being safe for teens. And FCC Commissioner Brandon Carr has been trying to ban TikTok for months. But with TikTok's popularity, one Democratic strategist says a national ban might not be so easy.
To tell us that we just won't have access to the app at all, I don't think is going to be a very popular move, particularly for young voters who did come out in this last election in a very big, strong way.
The Committee on Foreign Investment in the United States has been negotiating with TikTok about this. The thing is, though, they've been negotiating for years, and they still have nothing to show for it.